Hi friends, today we'll discuss an important current affairs. The act recently passed by the Parliament of India is Factoring Regulation Amendment Act 2021. Factoring Regulation Amendment Act 2021. So this is an amendment act. The original act was brought in the year 2011. The original act was brought in the year 2011 and we have brought some amendments to that existing Factoring Regulation Act. So the original act was in 2011. Because now the prominence or the importance of this factoring is increasing in the economy, that is the reason why we have brought some amendments to that. So what is the meaning of this factoring? It's not factory, it's factoring. Factoring means it is a type of financial transaction. Factoring is nothing but it is a financial type of financial transaction in which factor plays an important role. In which a factor plays an important role. So who is this factor and what is this financial transaction? Suppose this is a person or a company produced some items. He is a producer, just assume. Produced something. And he supplied his produce to another person. Let it be person A and person B. Maybe this person is supplying some of the raw material to the person B, but he supplied whatever he produced. In return, this person has to give money to this person A. But this person don't have money with him. So what he will do is, anyway that invoice is there and this person will give some sort of invoice and that invoice is with this person A instead of money. Instead of money, this person is holding an invoice in which he supplied that thing to the person B and on the name of B it will be generated. Now it is having only, it is in the name of B, not in the name of A. It is in the name of B. Now what he will do is, he don't have money but he has supplied that thing to this person B and he don't have money to pay it immediately. Now he is giving some assured invoice. Now what he will do is, he will go to a third player, called C and he will give this invoice to this person C. In return, this C will pay the amount to the A and with this invoice, the C collects this money from B at a later date. So, factoring is a financial transaction and a type of debtor finance in which a business sells its account receivables to a third party at a discounted rate. That means, suppose just assume he has supplied a worth of 1 lakh rupees of goods to the B and this B has given some receivable, we call it as some trade receivable. So this trade receivable has given rupees 1 lakh. That means I am going to give you 1 lakh rupees because you have supplied me a goods worth of 1 lakh rupees. But he may not give immediately, that is why this trade receivable is with the supplier. Now this supplier is selling this trade receivable to a person C. Now he is paying some amount of money to me. It may not be 1 lakh, but it will be just 90,000. Just I am giving an example, 90,000, because you don't know when this person is again going to collect from B. It takes some time. That is why he is discounting that 1 lakh at the 90,000, that means 10,000 rupees of discount. Now whenever he is collecting, he will collect 1 lakh rupees from the B. Ultimately the C gains the benefit of 10,000 rupees. And what is the purpose of C? And the C is meeting the money requirements or the liquidity requirements of the small companies or a particular company A or a particular person. Normally we will use this transaction in terms of companies, and to be precisely, this will be used by this is an MSME, and this is some of the big corporate companies. That means when MSMEs are supplying the material to the big companies may not pay the bills immediately, but they will issue the trade receivables. That means there is a shortage of money to the MSMEs, and in order to remove that problem, we created a system called this factoring system, in which a third party called factor, he will purchase the trade receivables at a discounted rate, and later he will collect it from the big company, or the to one who the MSME has supplied the materials, or the one who issued this the trade receivable. So the point here is, this is what we call it as factoring process. This is what we will call it as factoring process. This factoring process can be done in two ways. One is with recourse, second one is without recourse. Factoring with recourse, factoring with recourse, without recourse, without recourse. So what is this with recourse and without recourse? The difference is something like this. If it is with recourse, in this with recourse, what will happen is, this company A has sell the trade receivables to the factor C, now at a discounted rate of 10,000 rupees, and he paid 90,000. Now he will collect 1 lakh rupees from the B. But suppose if he unable to get that money from B, if the factor unable to get that money from B, then the liability lies with the company A. That means the one who is selling the trade receivable to the factor is also sharing the liability for that money. If something goes wrong here, again this factor comes and he will ask you to pay the entire amount of money. But in case of trade without recourse, there is no liability to this company or a person who sold trade receivables to the factor. Once he has sold this trade receivable to C, and he has take some discount and he has paid some money, after that the responsibility of the A ends here itself. Now it is the responsibility of the C to collect money from B. It is the responsibility of the C to collect money from B. So there is no liability to this A. That is without recourse. That means a factoring with recourse, a factoring without recourse. In without recourse, there is no liability to the company who sells this trade receivables to the factor. Now, in this, there are two terminology. One is we call this as factor, and this person we will call it as assigner or assignment. So this is an assignment and this is the factor, and the assigner will sell the trade receivable to the factor, and the factor takes the total liability. We call it as a factoring without recourse. But if the assigner takes the if the assigner having any responsibility, we call it as factor with recourse. Earlier we have a system called bill discounting. In banking system, I explained this discounting of bills. It is almost like a discounting of bills, but discounting of a bill is something a factoring with recourse. And in that process, suppose if your bill is unable to collect the money, then immediately he will comes to you and he will ask you to repay that money. So this is what factoring process, and factoring with recourse and factoring without recourse. Factoring with recourse and factoring without recourse. Why actually this factoring is important? This factoring is very, very important for the MSMEs, because they are small companies, their capital, their net worth is less, Until and unless they have the regular working capital, they cannot continue their production. But they need an assured market. Sometimes they may export, sometimes they may sell their raw materials to the other companies. But whenever they are selling the material to the big companies like corporates or public sector undertakings or government departments or any of the big corporations, if they sell, that company may not pay the amount immediately. Till that point of time, these MSMEs cannot survive. Because if they get that money, with that money, by using it as a working capital, they will increase the production. And if there is a shortage of money, then definitely they don't go for the production, or they will cut down the production. That is the reason why the supplying of the working capital to the MSMEs is always important. Whenever they supply any material to anyone, if they get money back immediately, then they can run their production, or they can increase their production sustainably. And this money, the time value of money is very important, because the money today MSME is supposed to get, if they don't get today, if they get after 6 months, then there is no use, because they have lost the opportunity. The entire money, because the money if you supply today might have been used for the production of some more valued assets, or some more valued producer goods. So that could have been happened. So that is the reason why this timely supplying of money is very, very important, so that there is no discontinuity in the production process of this micro, small and medium enterprises. So because of that, we have started this process called factoring. Because of that, we have started the process called factoring. Now in this factoring process, the same thing just now I have explained will be done. And in that manner, we will always supply money to the MSMEs at a discounted rate. That means sometimes the money may be costlier, but the timely money is very, very important than the costly money. Because sometimes money may be cost here. Suppose instead of 1 lakh, you are only receiving 90,000 rupees. Instead of 1 lakh, you are receiving only 90,000 rupees, but the timing is very important, because at this point of time, if you are unable to supply, then there is no use. Even if you supply 1,10,000 rupees after 6 months, instead of 1 lakh, you may pay 1,10,000, but that may not be that much use. So the timing is very, very important than the cost of the money. So because of that, and in the entire world this process is going on, and because of that, in order to promote this type of factoring system, we have brought a regulation in order to promote this factoring process in India, because this factoring process is one of the important source of liquidity to the companies worldwide. It's not only in India, worldwide, and especially for these MSMEs, because they don't have much assets, they don't have much capital, they don't have much working capital. So that is the reason why this liquidity is very, very important for the MSMEs, and in order to meet that liquidity supply, we have started this factoring process. Now the point is, how come this factor is accepting your trade receivables? That is an important. Suppose a company, an MSME, we don't know, because MSME means they are very small companies, but they are bringing some sort of invoices to you, and they are asking like, take these invoices and give me that money, because in that invoices I must get 25 lakh rupees. Maybe you will take whatever the discount that you are normally taking. Just assume they are taking 1 lakh rupees, just assume, and okay, by taking that invoices are trade receivables, and they are giving you 20 lakh rupees, 24 lakh rupees. Why they are giving 24 lakh rupees? Just because by seeing your trade receivable, because you are an MSME, you are a small company, there is no collateral, but how come they are giving? They are giving not because of you, they are giving because of the big company. They are not giving because of you, they are giving because of this company, because this trade receivable have an acknowledgement that I have received the goods from so and so company, and it is a big company, it's a corporate company, or it is a government company, or it is any corporation, public sector undertaking, anything. So these people have a faith in this but not on this. That is the reason why they are doing that discounting process. They are giving. So anyhow, in order to create this process and in order to regulate, we have brought an act called Factoring Regulation Act in the year 2011. In the year 2011, and all the companies have their own credit ratings. Based on the credit rating of a company, they will take this process. But the point is, in the year 2011 act, they have clearly mentioned entire this process. Now who are these people? Who are these people? Okay, I understand this is MSME and this is any big corporate or any public sector undertaking or any company or anything which is said by the Reserve Bank of India. And who are these people? And anyhow, these people, whenever they are whenever they are accepting the trade receivables, they will looking into the credit rating of the issuer of that and they will do. But who are these people? Who are these people? From where they are getting money? Why they are in this business? Why they are in this business means they are getting some profit, that is why they are in this business. That is why they are in this business. But in this, Reserve Bank of India is actually the facilitator to this entire process. And under this legislation of Factoring Regulation Act of 2011, 4 types of entities were allowed to take this factoring activity in India. 4 type of entities will take this factoring activity in India. So what are those 4 type of entities? First one is banks. Banks can do this activity, but whatever the entity that they are going to perform this factoring business, they must take the approval from the Reserve Bank of India. Reserve Bank of India certification is necessary in order to take this factoring activity in India. Anyhow, banks, first entity is banks. Second one is statutory corporations. Statutory corporation, that means if any corporation start incorporated by any particular legislation, then they can also perform. But I said Reserve Bank of India's prior approval or certification is precondition for this taking of this factoring business. Statutory corporations. Third one is NBFCs, non-banking financial companies, can also taken up. Non-banking financial companies, that means they perform banking activity but they are not comes under the definition of bank. Next, fourth type is companies. Companies, again any company cannot do, company has to meet some criteria that will be decided by the Reserve Bank of India. These are the 4 type of different entities who can participate in this factoring activity. I'll take this NBFC because this is very, very important as far as the latest amendment is concerned. In this NBFC, what we have done is, those who are registered with the RBI, they can only perform this factoring activity. But the point is, to whom the RBI will grant the certification to perform the factoring activity, they have to meet again some criteria. The criteria is this: the financial assets, they have some other physical assets, but I am only considering financial assets. The financial assets of that NBFC and also the total income of that NBFC. Total income of that NBFC. The total financial assets of NBFC and the total income of the NBFC, in that at least 50%, should come from this factoring. That means either in their total financial assets, this trade receivables, the financial assets and the total income should be total income should be from factoring business. Factoring business. That means by that time they have already taken up some activity. By that time they have already taken up some activity, and if you get minimum of 50% from these type of activities, then only you will be allowed to do the this factoring business. Because earlier, prior to this legislation also, they do some sort of this factoring, but the process got completely streamlined with this legislation, and in that they said like, okay, NBFCs whose your existing financial assets and total income, if it is at least maximum of 50% is from that, then you can seek the license from the Reserve Bank of India and you can do it directly, and if something goes wrong and all the process, everything is under a regulatory under the regulatory purview of Reserve Bank of India. Suppose if you got the certification from the Reserve Bank of India, then comfortably anyone can go and anyone can take that. But if it is not certified by the Reserve Bank of India, then it is a problem. Then it is a problem because they can't believe this factor also. So this is the problem. That is the reason why. That is the reason why we have given some sort of the assent, some sort of approval to these NBFCs. So these NBFCs are very limited. Now, the point is, what happened in the year 2021? What happened in the year 2021? In the year 2021, what happened is, prior to 2021, in the year 2019, Government of India has appointed a committee called UK Sinha, sorry, it's not Government of India, it is Reserve Bank of India appointed. It's an RBI appointed a committee in order to looking into to improve the performance of MSMEs under the chairmanship of UK Sinha. So UK Sinha committee was appointed in the year 2019 by Reserve Bank of India to suggest long-term measures for the economic and financial stability of the MSME sector. So because MSME sector is facing lot of cash crunch and also this liquidity constraint, that problem is there. So in order to bring that long-term stability in both economic and financial aspects of MSME, UK Sinha committee was appointed. And one of the recommendation of the UK Sinha is, one of the recommendation of UK Sinha's committee is, why you are allowing only few NBFCs to be in factor business? Why not other? Let allow all the NBFCs. Let allow all the NBFCs on this factoring business. So that means there are only few. Suppose if I want to give a number, before this 2021 amendment, there were only 7 NBFCs that fits under this definition. That means earlier only 7 NBFCs were allowed. Only 7 NBFCs were allowed to take this factoring activity. And if at all I want to give some names like Can Bank, SBI Global, Siemens Factoring, like there are some 7 companies are there, 7 NBFCs are there. But now UK Sinha has recommended that no, let allow all the NBFCs to perform in this factoring business. Factoring business. So with the recommendation of UK Sinha committee, in order to bring some sort of flexibility in factoring business, they have brought this 2021 Factoring Regulation Amendment Act. Now what happened is, under the 2021 Act, earlier only Reserve Bank of India's approved NBFCs were only taken factoring business. That doesn't mean that other NBFCs are not taking the factoring business. They are also taking, but that is not an approved one. That is not an approved one. But what we are doing, what we have done now is, this principal business condition was removed. So what is this principal business criteria? That means earlier you said like, if you are earning, or if your primary, or if your principal business is factoring, then only you will be allowed to take the license from the Reserve Bank of India. Remaining people who are not doing the factoring earlier or who are doing the factoring at a lesser rate, they are not supposed to take the license from the Reserve Bank of India. That was earlier. But what they said is whether your principal business is factoring or not. Your principal business is factoring or not, you can take license from Reserve Bank of India in order to perform the factoring. That means because of this removal of this criteria, now all the NBFCs, irrespective whether they are performed the factoring business earlier or not, whether their chief or whether their principal business is factoring or not, now anyone can involve in this factoring business. And if at all I want to give a number, I told you like earlier only 7 NBFCs were allowed to perform this NBFC because that was the only licensed factors, but now that can be increased up to 9,000. 9,000. So this is something about the act, that is first. Second one, in order to prevent the frauds, because now the fintech is, that means financial technology is increasing. That means earlier it was very difficult. Okay, see, now if you looking into the same, I'll draw A, B, and this factor C. Now you can get the data from A, you can get the data from B, you can looking into the credit rating of B, you can looking into the credit rating of A. That entire data is now accessible to anyone. That means with the emergence of financial technologies, you can take the data from anywhere, from their bank, from their share market, from their anywhere. Now we can track the data. That means the financial technology companies which are emerging today, now they are making this finance so flexible, so simple, because they are having the data. By using that data they can do any function. Suppose if at all I want a loan, now earlier days it was very difficult, but now what they are doing, all my returns, GST returns, income tax returns, everything now it is available to everyone. Now if I just have that data and if I just looking into that data, immediately I can say whether I can sanction the loan or not. So such a technology is improved. Now because of that improvements in fintechs or financial technology companies, this process has become very simple. This factoring process has become very simple. And now in order to reduce some of the frauds, because these are the lot of NBFCs are now coming into the market and lot many MSMEs are there. So that is the reason why in order to reduce or in order to prevent the frauds, we are streamlining the processes. That invoices must be uploaded in a stipulated time and that they will be verified with that company. Like now they are making the process transparent and they are streamlining the process so that they can reduce the frauds, and further they have added some provisions in this act. The theme of that provisions is this. Next, the definition of the assignment or the assignee, that means A. The definition of assignment and the definition of receivable. Receivable means what the assignee is selling it to the factor. The definition of the receivable and the definition of the factor. They have widened the definition of the assignment, receivable and factoring to bring the definitions of these three things in consonance with the international definitions. Because earlier our definitions are so narrow. Now we are widening the scope of this definition in consonance with the worldwide definitions, so that any global company can also issue trade receivable, any foreign MSME can also use this trade receivables, because it's a global norms that we are following. Next, the ultimate regulating power in this is Reserve Bank of India. very important. Reserve Bank of India. So Reserve Bank of India is a regulating agency. We want to streamline the process. We wanted to allow the more and more NBFCs to participate in this factor business, and at the same time we are having some regulations with respect to Reserve Bank of India. But can Reserve Bank of India, because Reserve Bank of India is already having lot of functions, but can it really manage it well? That's the question mark. But the point is, Reserve Bank of India is now going to regulate the entire process. Regulate the entire process. So this is important thing. And one more thing, just remember this, it is important to the same MSMEs. There is a portal called Gem Sahai. There is a portal called Gem Sahai. So Gem Sahai is a portal which is helpful for meeting the credit needs of MSMEs. This is a government e-marketplace. It is a platform. On this government e-marketplace, some of the MSMEs are selling their produce to the government, and government may not repay that amount of money immediately. It may take some time because it's a governmental process. So those who are supplying to the government through GEM portal, and the moment when they have confirmed the order, immediately they will supply, but by that time they can seek the credit from any of the existing these factors. So this is something another important portal. So this portal is facilitating the people from the GEM platform to access to the credit needs from the factor. And simply they don't do, they have to attach their own required documents, and based on the documents they will get. So the point you need to understand is this timely credit needs of MSME is very important. And for that, now we are having a platform called, that platform we are called it as TREDS platform. So what is this TRED platforms? Trade receivable, it is a trade receivable discounting system platform. That means the trade receivables are discounted. On the same platform we will upload our trade receivables, and they will check in backend with that company, and ultimately they will sanction and they will give the money. Now what we are doing is, we are improvising this trades platform, and we are bringing some international practices. We have widened our legislations, and we are also increased the scope of the, we are also increased the definition of the factor, and we allowed all the NBFCs to perform this factor business, though you are not a principal business earlier in factoring. So this is something about factoring. This is very important, because it is a new thing and it is so helpful to the MSMEs. Now the MSMEs no need to worry about their working capital. Even if there is a delay in their payment, they can discount at this factor through factoring, and by using this TREDS platform they can get some money, and there is no liability to the MSME, because now whatever the system that we are following, the most of the systems are only this factoring without recourse. So this is something about the factoring business in India, and the recent amendment in the factoring business. The only thing I can say here, the assignment as far as India is concerned, only MSMEs are allowed here. And again, whenever the factor is purchasing your trade receivable, or any big corporate company purchasing your material, they will look for your own registration, and you must register yourself. Okay, so you must register yourself with the Government of India, and those MSMEs registered with the Government of India can be able to use this factoring platform. On the other hand, who can be this big company? Either it can be a corporate company, or it can be a government department or public sector undertaking, or any other company decided by Reserve Bank of India can be the buyer. So buyer, seller, and you know who are the factors and what were the recent changes to the factor. Because MSMEs are very important, You are all aware, like it creates lot of employment in the economy. It is having lot of employment creation potential is there, and it is contributing to the 30% of the GDP, and whereas when it comes to the exports, it is contributing 40% of the GDP, sorry, 40% of the total exports they are doing. So that is why MSMEs are very, very important, and with this process now MSMEs can, because MSMEs production is important, along with the production, the marketing is also important. But what is happening is, after marketing, if you don't get the money back immediately, it creates a problem. That is why in order to resolve that, we have brought these amendments. So this is something about Factoring Regulation Amendment Act 2021. Okay, thank you.
Amrita IAS Academy.